Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Tuesday, as expected, the RBA delivered its interest rate and rose by 25 basis points from 0.1 to 0.35. And also in the statement, it did seem somewhat hawkish as they were delivered the fact that they're still combating inflation. This sent the Australian dollar further after breaking 17.95 and reached its objective of 71.55 before pulling back to 71 cents. In light of the technical pattern, it hasn't quite fulfilled its bullish pattern to support a further rally, and with the resistance still capping at 71.55, may play the range now from 69.80.90 to 71.55, unless we get a break to that top side. If the indicators can improve, then that would give further indication up towards around 72.35 as a potential target. With the dollar index still consolidating around 103.50, the market for the euro has continued to trade sideways with an inverted hammer posted from New York this morning. In light of the pattern, the level of 104.85.95 is still proving somewhat a bit of a challenge for the bears, and the bulls are defending it quite well. Later today, the US Federal Reserve will deliver its interest rates with an expected 50 basis point rate hike. It's all about in the statement. If the statement's not as hawkish, then the dollar index may take a bit of a tumble. Also, coming up this week, the main event is the non-farm payrolls with a lower number than forecasted than previous, which may put a little bit of pressure on the US dollar as well. But more to the fact is, keep an eye at 4 a.m. Sydney time on Thursday when the rate decision from the Fed will be delivered. In light of the pattern, though, from a technical point, let's see if the market can sustain above 104.85, and if so, then I'm looking up towards 106.30 as a potential target. In the unexpected event that the 104.85 breaks, then that will deliver further bearishness towards 103.40 as a potential target. But we are extremely oversold. From a monthly, the ADX is overheating from a monthly, and even if we drop down to the weeklies, we're oversold, and also from the dailies, and improvements coming through. So that's why I feel there could be potentially a small rebound. The dollar yen, well, the market still hasn't quite found itself in a firmer direction, as the support level at 129.60.65 still holds. There is still a bit of divergence, but I'd still keep an eye on this pattern, because if it does actually improve, then I would feel that the support will continue to hold at 129.60.65 and may see it rise up to 131. But in light of the pattern, at present, I'm still holding the view that the challenge will be to the downside. And let's see if we can break 129.60. That will give further indication to a further bearish call, and that is towards 127 area and maybe a little bit lower. With eyes looking towards this Thursday with an expected rate hike from the Bank of England of 25 basis points, we've got an inverted hammer from the close of New York this morning, and the technicals are still somewhat ripening up for a potential rise. If this is the case, I'm looking from the base at 123.80.90 to hold, and I feel that the market may look up towards the immediate target of somewhere around, firstly at 126.15, and then beyond there up to around 127.5. The market is a little bit indecisive when it comes to sterling Kiwi, as we got a long-legged doji posted around that 194 area. In light of the pattern, though, I feel that the market is struggling at these highs, and therefore could see a pullback to 191 in the interim. Another challenge to the downside, and still focusing on that level around 1,848 to 52. Didn't quite break it last night, and nor from the previous day, but nevertheless the technicals are still somewhat heavy. I feel there is still potential for the downside, and I am looking towards the region of 1,820 before any initial demand returning for this market. And wrapping up with oil, well, the market retreated again from that 105, 106 area, and still at present is somewhat negative as the RSI breaks back through the midway point. That gives us further indication that a pullback may be in play towards $97.5 to $98 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and also the end of the day wrap.